Good morning, SMF MMTs. We've been quite busy this morning. So look at, here's the gap open list. You got that Netflix, you got that win again, the same culprits here. Google's up $1.80. So the pre-morning, pre-market futures gap is it's okay on the Nasdaq comp. And now on the other hand, on the gap open down list, we can see that it's very diminished. So for at the moment, the bulls are in control. When I go over and I take a look at the NYSE, which today we'll just go to the primary session. I'll just do them all in one video. The gap opened up on the NYSE. As we can see, you got CEO again. The thing has been on a rip. Our wonderful MCP that we've got calls on. CMG, another restaurant culprit that we're looking at over the weekend to know that high commodity prices in the food section is going to cramp their margins. But nonetheless, look, we'll go through that during an earnings special. But the gap so far in pre-market is extensive. It's not diminished. And you got potash in there. There's lots of opportunities here. You got, some very good names here that are the culprits. Again, now on the gap open down list, Ken Flag, GD is down $3.01. General Dynamics, ADS, so you can see what's on the NYSE right here. Other than that, the rest of it is what it is. We are at a very critical point in the market, meaning that from the bear reversal to the bull raid, and the low factor is people do not have fear. The VIX is at very lows. The VXN, those are both related, the VXN to the Nasdaq. We did that over the weekend. We know exactly where these things are. We know exactly where the market is either going to get into positive territory for the SMF trading year, because right now all of it is at a neutral. We're not positive in the SMF system, but we're not real negative. We're not negative hardly in the SMF system. And some things are positive, but certain things within the indexes for the first quarterly year are what they are. And basically what I want to make clear about that is the market is going to take a lot of work to get through that S&P. It's going to have to clear that 1340, 1350 area where the last bear reversal was that we called. So once it gets up above there, it can do that. But earnings season is around the corner. We all know that the first GDP of the year, the first quarter, was weaker than what people had anticipated because of worldwide events. We do know that. We do know that we have priced the market back up in toward the high with that, and certain equity names going into the earnings season are priced to perfection and some are not. Place to be is undervalued.